I'm J Rod, joined by the one and only Zach Scheit. And how are you, man?
I'm doing well, man. We're trucking along in another dynamic year. Things are going crazy in the market, so we've got a lot to talk about this week, this month, once again. So yeah, I'm excited about this call.
Yeah, me too. It seems like we've been doing this call for a couple of years now, and the longer we do it, the crazier things get. But really, it's crazy is kind of the norm now, right? I mean, we've got a lot has happened in the last, since the last time we talked, which seems like the regular fare. But yeah. I love this. I love sitting down with you, Zach. We get to cut through all the noise, all the BS to, really what matters, especially in the world of income, which, hardly anybody seems to be talking about right now.
Yeah. And yet at the same time, income is becoming more and more attractive to investors. And, I will just piggyback on what you were saying. Yeah, I love this whole business that we're in of staying on top of the market. And I love being an investor. If you're on this call, I hope you love being an investor because things are always changing. And so there's never a boring day with what we do. And, the neat thing is that you can actually be profitable just by paying attention to what's going on and kind of being engaged and involved in this world that we live in. And so I love that. It's a kind of a way of making money with your brain, being able to think about what's going on, what's developing and invest accordingly. So let's take a look at what's going on. So one of the things that we need to do is take a look at what's happening in the overall market and what's causing this volatility. And the biggest issue that investors are dealing with right now is the change in inflation, which also affects the change in interest rates. So investors are worrying more and more about how the Fed is set to hike interest rates, perhaps much higher interest rates over the next year. So right now we're seeing it every day it changes. We're seeing people think that the Fed's going to hike interest rates by 50 basis points in March. Well, maybe not. Maybe it's just going to be 25. We're seeing people advocate 5 interest rate hikes over the next, throughout this year, or maybe 7, or maybe only 3. And the market continues to fluctuate back and forth depending on kind of the prediction of the day, if you will. If somebody important says we're going to have 7 interest rate hikes, then everybody gets worried. But we need to understand why interest rates actually affect stocks and which stocks are more affected by these interest rate hikes. So the Fed is worried about inflation. And one of the ways that they, in fact, almost the only way that they can help to keep inflation from becoming too high is to raise interest rates. And one of the reasons that works is when interest rates are higher, you have better things to do with your money, right? You can invest in a savings account or a treasury bond or some other interest-bearing account, and you can get more for your money when interest rates are higher. So if the Fed is successful at raising interest rates, it means that people will put, and businesses too, will put their money into other areas that generate income instead of just continuing to spend money and spend money and spend money, which drives prices higher. So if you kind of put those pieces together, you can understand why the Fed wants to hike interest rates. The downside of these higher interest rates is that it naturally drives stock prices lower, and specifically stocks that are going to generate earnings farther down the road. Because if I'm investing money today and I'm expecting to get a return 3 or 4 or 5 years down the road, I want to make sure that that return increases by more than what normal interest rates are. Now, if interest rates are very low, then I can expect that I'm going to get a 1% return, 1% return, 1% return for 5 years before I actually get that money. And that means that I'm willing to pay a lot more for that particular investment. However, if interest rates are higher, that means I should expect to get a 5% return and another 5% return and another 5% return over the next few years until I get that payment from the investment. And so that means I should pay a lot less today for that same investment. So when interest rates rise, it just means that you want to pay a lot less today for something that you're going to get a long way down the road. So that's why a lot of the speculative tech stocks have come under pressure as interest rates have moved higher, because these companies are not generating profits right now. They're expected to generate profits in 5 years or even 10 years or 15 years in some cases. So we should pay a lot less for them now because that hurdle is higher, because we need to get paid a much higher rate of return over the next 5, 10, 15 years to make that wait justified. At the same time, stocks that are paying us income right now are not nearly as affected by higher interest rates. And so that's why a lot of the value stocks and the companies that generate general profits that are reliable day by day by day have not been hit, or at least not hit nearly as hard by these higher interest rates. And this is an exciting time to be able to start picking out those stocks, because guess what? Interest rates don't go up for a day or two or a week or two and then level out. Typically, we see a long period. We're already talking about this year and into next year, where the Fed raises interest rates. And generally speaking, those trends can continue in the broad market for years at a time. So we could be in a situation where value stocks outperform, not just for this year, but for next year and the year after. And I don't know about you, but I'm much more excited about making money in the market than I am about being able to say, I own this Peloton stock, or I own this, this artificial intelligence stock. It really is a whole lot more exciting to be able to say I made a profit than to be able to talk about, some esoteric technology that really isn't making us money in the day to day. Meanwhile, if these stocks get sold down low enough, then they really will become great values and great opportunities that maybe next year, maybe even later this year, it makes a lot of sense to buy some of these tech stocks, these speculative tech stocks, at a much lower price, and be able to actually get that high return as they move back into profitable state.
It's funny you should mention Peloton too, Zach, because that's a stock that's off 80, 90% off of its high. Where's the low? I mean, what the talks this week started about somebody saying Amazon or Apple looking at potentially buying Peloton at a much cheaper discount than it was going for, this time last year.
Sure. Yeah. And a couple things on that. So one is that you and I have been talking about Peloton specifically, and some other, high tech, high flying growth stocks. And hopefully we've been able to steer some people away from those names to miss out on those losses. And, anytime that you can sidestep a loss, it means that you've got more money left to invest. So hopefully we've helped keep some people out of trouble. And the other thing is just buyouts are exciting. So there are some really good opportunities now to see tech stocks, the big blue chip tech stocks like Amazon or Apple that are already making money, be able to use that cash hoard that they have to buy something really, really cheap that they can then turn into a business that really is profitable immediately, instead of having to wait farther down the road for those profits to come in. And there's a lesson for us as investors there too. Having cash available makes it a whole lot easier to step in and take advantage of these opportunities that the market is giving us. And the best way to have cash available is to actually have income stocks, dividend stocks that are paying you cash month after month, quarter after quarter. So you're invested, your money is growing, but you're still getting that cash coming in, and then you can put that to work wherever the best opportunity is at that particular time in the market. And so, yeah, I completely agree with you. There's some really exciting opportunities that are being created as these stocks get sold off. Being able to navigate a market like this will put you in great shape to protect and grow your wealth over time. So if you can do it now, you can do it anytime.
Love it. Love it. Well, thank you so much for your time as always, Zach. Great stuff. And look, can't even imagine what's going to happen between now and the next time we do this call.
It'll be another great call, I'm sure.
For sure. Well, thank you, Zach. And on behalf of the Lifetime Income Report Pro, I'm Jay Rod, and we'll see you next time.
See you guys.